Hi, Jonathan, Newpay Financial Partners, looking at investment markets. You've still got the ongoing conflict between the US and Iran. Now, at present, the sort of ceasefire is sort of holding, but sort of very fragile. Trump keeps putting forward the US proposals, which really just hammer home his demands, which obviously sort of get rejected by Iran. Iran then comes back and puts forward their sort of proposals, and Trump just sort of dismisses them sort of almost without reading. And then claims if they don't make a deal, he's going to start military actions again. Now, obviously, that's hampering traffic through the Straits of Hormuz. But then pretty much on a daily basis, Trump keeps coming out and saying, oh, you know, deal is very close. They want to make a deal. They've got to do this. They've got to do that. But in reality, there seems to be very little progress being made. As Trump is still trying to claim that, you know, the US is the sort of victor, he's the victor, and he will negotiate the best deal and sort of come out on the winning side. And really, it's a question of him just trying to sort of extract the US from this situation without losing face, which is proving very difficult. Now, in terms of economics in the US, the economy is pushing on at a pretty good rate. Latest employment data came out at 115,000 jobs created versus the expected 55,000. Although the March figure was revised down a little bit. So you've got a reasonably robust economy, but then the inflation print came out this morning, CPI, and that was one of the highest we've seen for quite a while. It came in at 3.8 versus 3.3 last time around. And that's obviously as the oil impact starting to hit the US prices. Which then poses a pretty difficult situation for the incoming Fed chair, Kevin Warsh, because, you know, Trump has sort of implied that as soon as Kevin Warsh is installed as the new Fed chair, he'll be looking to cut interest rates. But if you've got rising inflation and you've got a reasonably robust economy, there's no reason to be cutting interest rates. You know, if anything, the market is looking that the next move for the Fed may even be a hike. And that's certainly been reflected in the bond market. You've got that 10-year at 446. The 30-year is 5%, above 5% at 503. And the 2-year is 4%. So that's not really indicating that the market is looking for an interest rate cut anytime soon. Indeed, at the last Fed meeting, obviously rates were left unchanged, with a target rate for Fed funds of 3.5 to 3.75. But it was a split vote, 8-4, which is the sort of largest split we've seen in quite a while. You know, as usual, Stephen Miram was still looking for an interest rate cut, which, you know, it'd say given the current circumstances, it's very hard to see that materializing. Now, against this backdrop, we've still got the US earnings season going through, and, you know, on the whole, they're sort of coming out slightly better than anticipated. Now, obviously, this week we've got the meeting between Trump and Xi Jinping in China, and that's going to be very interesting to see how that plays out. Because certainly front and center will be the Iran conflict. Now, the other conflict that's taking place, Russia-Ukraine, you know, potentially Putin is sort of muted for the first time that he's open to sort of talks and a potential sort of ending to that conflict. But just how serious is he with that statement? Is he just playing the West along? Now, as you can imagine, oil's pretty volatile out there, but WTI is back above $100 now at 102.50 and change. Now, very tricky times in the UK. They just had the recent local elections, and both Labour and the Tories suffered big losses. And that was really at the hands of the UK Reform Party and Nigel Farage, which is sort of the UK's equivalent of Trump. And indeed, Keir Starmer now is probably going to find it increasingly difficult to remain in his post as UK Prime Minister. Certainly he's getting pressure from all sides. And again, against that political backdrop, you've got a really pretty tricky time out there for the Bank of England, because the UK economy really is struggling and needs an interest rate cut. But obviously with the rising oil prices, it's very hard to see that materialising. Now, as the Iranian conflict continues and sort of drags on, it's putting real pressure on airline fuel. And that could be a major impact on the European summer season coming up. As airlines are already looking at sort of rescheduling and sort of cutting some flights. Now, as expected in Australia, the Reserve Bank did hike the cash rate, taking it up to 4.35. And that was an 8-1 split versus the 5-4 split for the last hike. And that's really all on the back of the inflationary implications coming through from the oil prices. But then the Australian budget's just been released, and that seems to be sort of pretty radical out there, and potentially could be politically pretty dangerous for the government. Now, here in New Zealand, a little bit of better news on the economy with the jobs data showing a little bit of a fall in the unemployment rate, which is obviously good news. But obviously you've still got the inflationary implications out there from oil. But if you look at the inflation figures in New Zealand here, certainly non-tradables are sort of pretty sort of flat, and it's just the tradables that really showing a little bit of an increase out there, which is really beyond the control. Now, also as well, obviously all parties are getting into sort of election mode here. Labour's come out and started talking about potentially means testing super. While National is talking about increasing the age of super now, beyond 65. Which is certainly a pretty tough conversation, but if you look at it, you've got a shrinking working pool and you've got an increasing superannuitants pool. But also as well, it's interesting, the housing market is, although it's not sort of pushing on in terms of price movement, activity is certainly picking up, which is obviously good news. Now, coming up with about 6 weeks now before the end of the year for KiwiSaver, make sure you made those contributions to get that government contribution. But also as well, remember that KiwiSaver is a long-term investment, and just because of the current market volatility, certainly if you're in your sort of 20s or 30s, you really have to avoid all the noise that's taking place out there and look longer term. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. I look forward to speaking to you soon.